Welcome to one of the programs that I enjoy the most as well as learn the most from. And all the amazing insights we're about to get are from the mind of Ruchir Sharma, unique mind. And now Ruchir has created his own investment firm, Breakout Capital. And of course, you know, Ruchir is the best-selling author of several books and mainly on trends in the world economy, as well as on India. And he's also a columnist for the Financial Times in England. Today we'll be showing you some really very crucial charts and data on India. And every data insight in this program is based on a great deal of research done by Ruchir and his team. Many, many thanks, Ruchir, for joining us and sparing the time and giving us this huge amount of research that you've done. It's really helped us understand where India is today, 75 years after independence, and where we are heading. And I would say that the insights we're about to see are uniquely Ruchir and are really different from many of the others that you've read, and a totally fresh perspective on where we are and where we are heading. So let's get started, Ruchir, on this incredible information package that you've prepared for us. Let's start with the first basic issue. We divide into two parts. The first part will be our progress so far.
Right.
And the first thing that you pointed out, if we go right into the data, India has come a full circle from 1950 to 2020. If we look at our world rankings by nominal GDP, in 1950 India was 6th in the world, and we went down, right down to number 13th in the world. And then in the last 30-40 years, we've gone up and we are back to 6th. So we were 6th in 1950, you say, and we are 6th now.
I think that's been India's development path. It's been V-shaped, which is that in 1950 and in the 50s, both in terms of our size and in per capita income, we had a particular ranking. And then we slipped. So the 60s and 70s was really a terrible time for India in the development race. And it was also the time when so many other economies in East Asia began to take off. So we really lost the development race in those decades. And sometime in the 1980s onwards, we re-entered that. And really, it's been in this century that our per capita income has started to really boom. So this has been India's development path, a V-shaped.
V-shaped, and you can see that from your chart. The yellow lines going down, the yellow boxes and going up. For all our viewers, this will all be on the website, so you can read the details later, like you want to know where China was. Did China have this kind of V-shape? Was it any different? Each country is presented on the chart, and that will be on ndtv.com. So you don't have to gather everything now. That's the basic point of the V-shape. That's just fascinating that we started at rank 6 and we are now rank 6 after
having slipped very badly in the middle. And I think that if you look at the next graph, which is in terms of per capita income, that story is even more telling in some ways. Because if you look at in per capita income, now for me, the single most important...
Here it is. Per capita income that you show is that, again, we're about the same level as we were in 1950, and per capita income as compared to the global per capita income.
Yes.
And there's that V shape again.
Yeah. So per capita income for me is the single most important criteria of a country's economic success, which is that how much is the average income of every person in that country. And what you see here is that we are today the gap in terms of how rich or how poor, depending on your perspective, India is compared to the rest of the world in pure per capita income terms. We are at the same level again as the gap, which was in 1950. So I think that this is quite a telling statement in terms of, and the two ways of looking at this again, it shows that in 75 years, the economic progress that India has made really has been a bit of a wash. But the good news is that it's V-shaped again, that India is on the upswing. That
while
the last
we went down, we have bounced back.
Yeah, we have bounced back after the lost decades, as I keep saying. So really, a story of two halves of India's 75 years. First half was where we really lost the development race. second half is where we are catching up again, and the catch up is so sort of from such a low base that we are just about getting back to the original starting point on some metrics.
You know, that first half where we lost out, population was growing, growth rate was so low. My PhD professor Raj Krishna called it the Hindu rate of growth, but I would prefer to call it the Indian socialist rate of growth, the Indian form, where there was corruption, there was nationalization, there was a lack of free enterprise, which changed a bit in the second half and we bounced back.
Yes, that's correct. And we will see some of the data here that
right.
One of the real discordant notes about India was that we got our political freedom quite early.
Yes.
But we did not get economic freedom. Right, and even today, as some of our data will show, we remain one of the most economically unfree countries in the world as ranked by organizations such as the Heritage Foundation. So this disconnect is very different. Now, when you look at most other economies in the world and nations in the world, right. They either got their political and economic freedom at the same time, or in many cases in East Asia, they first got their economic freedom and then they got the political freedom. India is one of the very unique stories where we got a lot of political freedom in the 50s and 60s, but economic freedom was in fact barely there back then, and we got some of it in the
nationalization of banks, nationalization of airlines. I mean, as you say, it was a suppression of our economic freedom by the Indian form of socialism, not true. So a 3% growth rate was the Indian socialist growth rate.
Right, and 3% growth rate when a population was growing at similar rates back then.
Right.
And now the population growth has slowed down significantly, and we have better per capita income growth.
So in a nutshell, you make these 3 points, which you can perhaps explain to us. So you're saying we are back into the global race. India's income per capita has risen to $2,200. Secondly, you say India's global ranking has been rising since the 1990s, which you just mentioned because of the changes in more freedom in the economic front. But India's ranking is still 158 out of 205 countries. They're talking about per capita income there. Explain these 3 key points of where we are now.
Right. So if India's per capita income back in 1950 was just $60, today it is $2,200. So clearly things have improved a lot, very significant changes in the levels of poverty that we have seen over. But this has happened globally. Right. And so India's ranking in per capita income terms has gone up somewhat in the last few decades, but still we are starting from a very low base, and our ranking in per capita income terms is still in the bottom 25%. So just a perspective to keep here, that in economic terms, in size terms, we're back at number 6. In per capita income terms, our ranking is still in the bottom 25%.
But income has gone up, but so has the rest of the world gone up. So we've kept about pace with the rest of the world.
Yes, in terms of over the 75-year history.
Yes.
But we have made significant progress and a big rebound in the last 30 years or so.
So one thing which everybody asks, that how did China do it? You know, you go there, you see Shanghai, it's just amazing, the transformation. And what you show is that our progress so far, that China's comeback was far more spectacular. They went through a very bad similar time from 1950 to 1960 odd, and then they just took off. If your graph is a real eye-opener, this.
Yeah, you know, this is stuff that even we learn as we are doing this, and I think that it really even struck me, and we were discussing this as we were preparing the slides here, which is that even as recently as 1990, India's economic size and India's per capita income was pretty similar to that of China.
Amazing, in 1990.
Exact 1990. Yeah. And back in the 1950s, India's per capita income was in fact slightly higher than China's. And after 1990, we have made significant progress where our per capita income has boomed, but China's per capita income has just gone parabolic, as you can see.
Yes.
So, so this is both the good news, bad news story that we have about India.
In a nutshell, how did they do it?
So, so I think that there are still, even after all these years in terms of what China has done, there's still a lot of misunderstanding about its success story.
Right.
And one of the biggest success stories in China was that its state its government was very controlling out there. It's a communist party. It was very controlling.
Right.
But really, since the 1980s, the government has been pulling back from the economy in a very methodical and systematic way.
This was Deng Xiaoping you're talking about, the man who changed everything.
Yeah, arguably one of the greatest leaders of the last century.
I don't care whether a cat is black or white as long as it catches mice, right?
Yeah,
that's his famous statement.
That's right. So like economically, he changed the orientation, but it's very important to see what China did. You know, one of the things which I often point to people is that in the 1990s, China fired 90 million people, 90 million people from its inefficient state-oriented sectors.
Right.
And it let the private sector come onto its own and like hire them and absorb them. And a lot of the private sector was in terms of allowing a lot of migration, allowing people to sort of go or pushing people to go towards the coastal areas, the coastal cities. New boom cities came up in China. Even
they created new cities.
Created new cities. The number of, even though India and China's population today is very similar, the number of cities in China today, which have more than 1 million people, is twice as many as India. They have about more than 50 cities today with more than 1 million people compared to half of what we have. The number of new cities that came up out there was incredible. So a lot of migration that took place in China towards these coastal areas, a lot of export orientation, manufacturing orientation, and this massive economic reform where the state pulled back a lot. Now this is stuff which in India we have found very difficult to do, that the state is still very involved in many aspects of our life. And also the fact that migration in India is much more difficult. Like there's one data which really struck me, that in India's case, if we look at all the rural areas, only 10% of the population in any rural district has come from some other district. That 90% of the people stay within that same district. They're born in that district. 90% of the population in a rural district.
Migration is actually very low.
Very low in India. You know, we speak about some migration from certain states, and we know what happens. And this is, one of those things that China is very much a monolith in terms of its political, in terms of its societal structure. One kind of people. India, with its very federal, state-oriented, very strong regional identities, migration in India is a lot more difficult. It's a politically fraught issue in many states. So it's very hard to emulate what China did, but we can still learn. And I think that the retreat of the state, which is in fact being reversed now by Xi Jinping, and we'll speak about that. And I think this is one of the problems with China too, that everything that China did to succeed over the last 30 to 40 years, of late it has been reversing. And there, I think, again lies the opportunity for India to shine, at least relative to China. Because in India's case, our incomes boomed. We did so well in the 1990s and 2000s, but we were overshadowed by the fact that China did far better. But now that China is reversing some of it, India has a bit more of a chance of at least getting more of the spotlight economically.
Yeah, actually, it really is an eye-opener when you say 1990 we were about the same. In fact, I used to go to China in 1990 and for the World This Week, and I saw the streets were just full of bicycles only, hardly any cars, everybody in Mao tunics. I went to the factories, they were old, obsolete Russian type of factories. And then comes Deng Xiaoping and he allows foreign investment, like gives them huge benefits and changes, call it one country, two systems. It really is, one system is pure capitalism in China. It's no longer a socialist country. And they had the first McDonald's, and he had a big poster where he was kind of blessing it. And then and I think there are more than 10,000 McDonald's there now. And the first golf course, it just he transformed it.
Yeah, that's correct. But I think that of late now China is reversing a lot of its success, but still, this is a look back. We'll discuss that in the next section as we sort of look ahead in terms of how India does.
In your data, you start with these broader perspectives, but you go on to more micro and interesting facts about India. And if we have a look at, for example, what you say about life expectancy, what's happened in India, just look at that. Life expectancy has gone up sharply. From only 40 years was the average lifespan for a person to now 70 years. But then what I love about it is, one is this actual absolute number, and then how do we compare with others? And we are about the same as other countries in our income level. China is slightly more.
Yeah, so I think on various metrics as we look at it, it's very important to sort of look at it in both absolute and in relative terms. So the progress India has made over 75 years on some of these key human development indicators is quite significant, but on many indicators we are comparable to other countries with a similar per capita income, and in some measures, as we'll see, we are in fact a bit worse off than other countries.
And then you go into a much lower death rate among infants. If you have a look at that, that's also very encouraging for India, that our death rate was 140 deaths per 1,000 births. It's now about 25, just over 25. But again, compared to others, our death rate is still slightly higher. It's what now, roughly 27. Other countries of our income level is 20 per 1,000, and China 5.5 per 1,000.
Yeah, so again,
why is that happening?
Progress made in terms of reducing infant mortality, but as I said, on many human development indicators, the kind of progress that we should have seen is a bit less compared to what other countries have done with similar per capita income level.
Ruchir, you go on to talk about India's education and some amazingly encouraging statistics there as well. Both, well, one is again your absolute and then the relative. Let's have a look at how India has done in the last 75 years on education. Just look at that. Years of schooling have risen sharply according to Ruchir's data, from 7 years in school only to now over 12 years. But look at that compared to other countries. Again, about the same as other countries with the same income level as us, but China is a little higher. We are 12 years schooling and they have 14 years. But this again is going from 7 years to 12 years. It's good forecast for the future.
Yeah. So I think that in all these metrics, what we try and do as economic observers is look at in terms of how much progress has been made and where are we for a country of that per capita income. And I think that on most metrics, we are sort of where other countries are on, with a similar per capita income. Some places we are lagging a bit, some we are doing a bit better. But so I think that that's what we have tried to do with this data series.
The broader perspective, something you've just spoken about economic freedom. How much more free or less free has India become since independence? And Ruchir, your data shows that we have improved in terms of compared to the rest of the world. We are 25% of the world. What does that mean? And you make that very clear. It still means that 75% of countries have greater economic freedom than India. It was worse earlier. It was probably more like 80%, 83%. Now 75%, but that's still work to be done there.
That's right. So this is data prepared by the Heritage Foundation. They look at a whole bunch of indications in the US from seeing what's the size of the public sector, the size of state intervention in India, and they come up with how free are we economically. And I think that the point here is that we have increased our economic freedom in the country, but we still remain, compared to so many other countries, relatively economically unfree. So that's the big takeaway. And what they also sort of show is that generally the more economically free countries are, generally the richer they tend to be. That is a rough conclusion based on all the data that they have done.
You did a annual 10 highlights, and you had actually done data which showed more democratic and more free countries have a higher growth rate than autocratic countries.
Yes, I'd shown that in terms of that. More than that, it's the fact that they have much more stable outcomes. That what happens under authoritarian regimes is the fact that you end up getting very sharp jerks around in policy. But in democratic countries, you tend to get much more stable policy, and so over time that ends up being a winning formula compared to authoritarian countries where you get much more volatility. So you can get great policy or you can get terrible policy because there's no one to tell you that you're doing the wrong thing.
Right. And here you've got the media to tell you that you're doing the wrong thing, so you do something about it. Well, we won't go into that in great depth. But let's move on to an area which you could do about 10 hours on, the stock market. And you've just given us a tip of the iceberg, and it's really interesting what you provided. India's stock market has risen with the economy. In fact, it's gone above. The value of our stock market capitalization or valuation is more than the Indian economy.
Yeah, so this is, I think, one of India's strengths, in fact, if you ask me, which is the fact that India's got a very strong capital market culture, especially compared to other emerging markets, and there has been a lot of wealth creation that's taken place in India, as we will see in some of the subsequent data, and a lot of new entrepreneurs have been able to tap capital and create success stories with the stock market being at the heart of it.
And you know, that red line which you show going above the blue line is the Indian economy, the red line is the stock market. It's become more a higher value than the Indian economy. That means people are very optimistic about the future. Is that
well, that's one way of looking at it, yes, that the Indian stock market of late in particular, in terms of, you know, like we have seen that despite even some slowdown in economic growth, the stock market has kept doing well. So yeah, I think it's a fair statement to make that embedded in that are expectations of higher returns in the future.
And staying with the stock market again, if we move on to your next point, it's amazing how many winners, as you call them, are in the Indian stock market. Just explain to us. China has had 463, but India's had 156 winners, way above Taiwan, which of course is a smaller country but is booming. This is the number of large stocks that have gone up 5 times in 10 years.
Yeah.
My God, it's amazing.
Yeah, so this is a very fascinating data. Obviously, China is a much bigger economy. It's more than 5 times the size of India's economy. But I think that I find this very fascinating because if you look at the number of large companies in India, these are companies which we define have a market value of at least $1 billion. The number of winners in that pool has been very large. In fact, the maximum hit rate of companies which have $1 billion in market value and have gone up by 500% over the last decade, India is the highest number in the world.
Wow.
So in terms of the highest hit rate of any country, in terms of the number of large companies that have gone up by more than 500% over the past decade. So China's absolute number is higher, but as a percentage of the number of companies it has, that number is in fact lower. So a very significant achievement in terms of the amount of wealth creation that's happened in India over the last decade or so.
These are billion-dollar companies that have gone up in value 5 times in the last 10 years.
That's right.
That is amazing, the 156. And are they the same lot throughout?
No, so in fact, that's what, like we'll show that the number of new billionaires being created in India, the number of new entrepreneurs being created in India has also gone up very significantly over the past decade.
Okay, but the other thing in that which you show very interestingly is that government-owned companies, the valuation has not only relatively gone down, it has plummeted. Just look at that. Right on top is the foreign ownership of our equities, the domestic, which is going up, and government-owned has gone down. Explain that and the significance of that.
So this is a very telling data, at multiple levels. The most significant takeaway here is that just how much value the government companies have lost in the stock market that you can see here. This is a term that I define as privatization by benign neglect. That India has not done any big large-scale privatizations except of late marquee names like Air India, which are not even listed. But in terms of that, the government-owned companies have lost market value significantly. That's a serious destruction of wealth for the taxpayer as well. That the government ownership has gone down of companies in the stock market from nearly 15% to now 5% without any large-scale sales taking place.
Right.
So this is just, whether it's the banking sector, before that the telecom sector, in various sectors the government has lost value, and this just tells you about who are better managers of capital in the Indian economy. Because if you look at the private sector, has done much better. It's not to say the private sector doesn't have problems. There are all sorts of corruption and fraud issues which take place there as well. But on a relative basis, the government and taxpayers have lost massive amounts of wealth because of the government ownership in the stock market that has come down as the value has been destroyed. On the other hand, the good news now is that you have a lot of domestic investors, whether it's retail investors, other institutions, who are embracing the stock market much more. So they're putting more of their savings in the stock market. So even as foreign investors have been selling over the past few months, albeit from a very high base, the domestic investors are offsetting that, and that's a good sign of confidence.
About that foreign, that in your graph, they've actually gone up quite sharply since 2010. What does that mean? They're investing more in India and the value is going up?
Yes, that's correct. Both a combination that they put a lot of money in India and that value is going up. So in fact, on foreign flows, both apart from the last few months, in the stock market in general on foreign direct investment, India has done relatively well over the last decade.
And making this kind of more accessible to everybody, has this created billionaires? And you've got a fascinating chart on billionaires in India. We have a billionaire boom. It's the third largest in the world. First of all, the number of billionaires in the last 10 years from 55 to 140. And in terms of their wealth, it's gone up from 246 billion to 596 billion. That's a huge increase. And as a percentage of GDP, from 13% to almost 20%. So it really has made us the third largest in the world, while we're the sixth largest in terms of the economy.
Yeah, so with India, there are always multiple narratives. At one level, I think it's great to get so many billionaires, but there are concerns expressed also about inequality and wealth inequality when you end up getting such a large explosion which is disconnected from the growth in the economy. But I'll tell you what's the best news about this data, if you which we sort of really dug into. Of these 140 billionaires, currently, more than 110 are new billionaires.
That came up in the last 10 years.
That came up in the last decade. And if you look at that list of 2011, when we had 55 billionaires, more than half of those billionaires are no longer on the list. So this is a huge amount of wealth churn which is taking place. There is some concern about concentration of wealth at the top. But just one level below that, there's been a pretty massive boom which has taken place with so many new billionaires. So India has created more than 110 new billionaires over the last decade. And in which sectors they've created is also a very interesting story. A lot of those billionaires have been created in sectors such as manufacturing, healthcare, technology. And that's good, because in many of those sectors, these billionaires...
what India needs,
this is what exactly, this is what India needs. Many of these have been self-made in areas such as technology, and manufacturing is really key. I think this is one of those quiet stories in India that's taking place, which doesn't get that much attention. That one of India's big economic weaknesses, we spoke a lot about China versus India. China's big strength was its manufacturing and the way it exported its manufactured goods. India manufacturing has always been a bit of a laggard, but it's been steadily rising. So manufacturing as a share of the economy now, it's still not at the levels it should be, which is more than 20%, where healthy and very fast-growing nations tend to be. We're about 16, 17%, but it's gone up from 10%. So we are seeing a steady increase in manufacturing and a lot of wealth creation that's taking place in those industries. And lots of names have come up and sprouted. So I think that when I look at the guts of this data, it sort of is a very encouraging picture, even though the headline is a bit troubling that we have so many billionaires as a share of our economy.
In terms of equity. But some of the new billionaires, names that we hadn't even thought about 10 years ago.
In sectors, as I said, manufacturing, like healthcare, technology. Some of these are self-made people, because one of the big problems in India was always that a lot of the wealth creation was inherited. And that was where India sort of stood out in not necessarily a nice way. You'll always have inherited billionaires, but you need self-made billionaires a lot. So I'd say that the guts of the data have been quite encouraging of late.
Now moving on to the rupee. You've got a really amazing statistic, and I'd like you to talk about it. The journey of the rupee from 4 rupees per dollar in 1950 and 79 rupees now.
Well, it's a neat fit, something which I did not know, which is the fact that the rupee has fallen by 75 rupees over 75 years. Right. So I think that it's, it's done that in chunks, which is that it fell by a lot in the 1990s and like in the beginning when we had the big devaluation and things, but it was pegged for a long period of time at very expensive and unrealistic exchange rate in the 1950s and 60s. So I think that all in all, this has been a lot of unfortunate decline in the rupee's value. But the good news here again is the fact that today the rupee appears to be very competitive and very cheap, as we will see.
When you say unfortunate decline, there are positives to it, that it's easier to export, it's easier to boost your economy. So getting a proper market rate for your currency, if it has to go down a bit, can be a positive as well. I mean, a decline is not always a terrible thing. Right?
That's right. It's not a terrible thing. And as I said, that it's become cheap and competitive now. But of course, if a currency goes into a free fall, that's never a good sign.
Terrible,
so it's getting the balance correct.
And of course, it does affect your imports, and we have very inelastic
and your purchasing power. I mean, as a nation goes down.
That's great. That's a kind of quick snapshot of where Ruchir says where we've come so far, how we've progressed. Now let's have a look ahead a bit, Ruchir, and look ahead at where are we heading, in fact. Now you've got a forecast. That's the tough part. So anyway, let's have look at some of the global trends. The first global trend you talk about is that high growth around the world is declining. We had many countries in the 60s and 80s that were at a 7% growth rate. Now hardly any countries have a 7% growth rate. What are the actual trends on that?
Yeah, so the issue is that we all have a lot of what we call in behavioral terms anchoring bias, right? Which is the fact that we saw a lot of high growth countries because the golden era for the global economy was between really 1950 and 2008. That's when a lot of economies were booming and growing very fast,
right,
because you had a population boom around the world. You had for a part of that period a productivity boom around the world. Then even as productivity faded, we had a big increase in global debt levels, which was able to finance a lot of growth in the world. So that's what led to this big boom. And of course, the most important thing of globalization. We were on globalization on steroids, where the world was opening up so much.
What your graphs show, sorry to interrupt, that in 1950, above 25% of countries, that's 1 in 4 nations, had a 7% growth rate.
Yeah.
And now what is it?
Hardly any. In fact, today if you look at it, there are less than 10 countries in the world.
10 countries.
Of 200 countries for which data is recorded.
Right.
There are less than 10 countries in the world which are really growing at above 7, and those countries reporting that data are in Africa, where we really don't know how good that data is, quality is. But even some of the biggest success stories of our time, such as Vietnam, even those economies now are not being able to generate a 7% plus economic growth rate.
It's amazing change.
Exactly. So, when India was growing at 7, 8, 9% in the 2000s, when we recorded those growth rates, there were 40 to 50 countries in the world that were at the peak of the boom recording a growth rate of more than 7%, when India was also growing, and we thought that this is all about us. But in fact, in the 2000s, so many countries were growing at above a rate of 7%.
More than 50 countries, and now it's under 10 countries growing at 7%.
Yeah, exactly. I think the peak in 2007, there were like about 40 odd countries growing at a rate of more than 7%. And today, you can hardly find any country in the world which is growing that. So
what a change.
Exactly. This is a massive change, and I don't think we have adjusted our expectations and in terms of our forecasts based on this. We keep anchoring ourselves to what we achieved when the global economy was booming in the past.
You keep undermining anchors, anchoring. I won't take it otherwise, as they say. But what is the reason for this? And you now say there are 4 Ds. Explain those to us.
Right. So the most important factor for economic growth historically has been population growth. If you look at the global economies, history of the global economy, what you will find is for hundreds of years, thousands of years, the global economy barely grew. And that started to change somewhere in the 19th century when the population of the global economy started to increase very significantly.
Larger number in the workforce, all that.
That's right. So that led to a massive increase in the world's growth rate. And the population boom that took place after the end of the Second World War was a major impulse to global economic growth.
Demographics.
Demographics is what we call it.
Okay.
The second is that we had a big productivity boom also, which took place after the end of the Second World War, and that helped again lift global growth. Then of course we had globalization, and then we had a lot of debt which was taking place due to low interest rates. Now the era which is that we are in over the last decade is defined by what I call 4Ds. The demographics have turned very significantly.
Slow down.
In a huge way. In the 1980s, when we were also concerned about population growth rate, there were only 2 countries in the world where the working age population was declining. I think Afghanistan, Somalia. I mean, who cares, right? Now you have nearly 40 countries in the world where the working age population is shrinking, including countries like China. And then you have Japan, Italy. So massive change in demographics. Even in India's case, the population growth rates have slowed down. So these are big demographic shifts which are taking place. There are 2 drivers of economic growth typically, which is your increase in the working age population and increase in productivity.
Why is productivity declined? You think of all the new technology, productivity would go up.
This is a very long topic that I've written a lot about, including the fact that in many countries you have a lot more of government intervention, bailouts which take place, about keeping inefficient companies that are alive. I think that
inefficiency alive.
Exactly. So I think a lot of that, we have a culture of constant stimulus. So a lot of key elements of capitalism, the creative destruction, which is such an important and integral part of capitalism, I think has been undermined by much more intervention. So there are a whole bunch of reasons why productivity has also declined.
And you also mentioned deglobalization, from massive globalization and exports being export-led growth. Why did that change?
Well, because there was such a big reaction, the victory of people like Trump, Brexit, these kind of events. I think that was a societal reaction that we're getting too much globalization, which is maybe good for a lot of the emerging markets, including China and India. But for our societies, which is how the US and UK and all looked at it, this may not be that great for us. So I think that there was a change in narrative, that our jobs are being taken, the goods being produced are having somewhere else.
That the developing countries were gaining more from globalization, so they went inwards.
Yeah, that's one of the reasons. There are many reasons for this in these complicated topics, but I would say that there was a big societal reaction against globalization. And I think that even in countries like India, we have become much more protectionist over the last 10 years. If you look at the amount of trade tariffs on other barriers that we have put up. So we have also been partaking in this anti-globalization
But we are a developing country. We perhaps would have gained more by it, but however, as you said, that's another topic. And finally, something we've really focused on a lot is debt, the amount of debt in a country.
It's debt globally, which is the fact that there was a time when the rate in increase in debt of a country and the rate of increase in growth were like similar, but really in an era of very low interest rates around the world, the debt levels have gone up a lot. And the problem with that is that when you take too much debt, you're really buying from future growth. And I think that we're paying the price now. We have so much debt in the world that is now becoming an impediment towards growing very rapidly. So these are the 4Ds that I think are setting up the stage, or have already done so, for lowering growth everywhere. And so we now need to have new benchmarks for what we define as economic success. 7% plus economic growth has become extinct in the world.
We can't hope for that. But I want just to focus on that first point about demographics, your first of your 4Ds. And you talk about India's demographics, and the graph is actually quite astounding, that we are declining, population growth is declining rapidly, and it could be negative by 2050, but look at that graph. It's just shows that how we reached a peak and now we've just been declining, and our population is growing very, very slow, and it could go negative soon.
Yeah, this is the working age population, people between 15 and 64.
Which is a reflection of overall.
Exactly, which is a reflection of your thing. So of course I know that a lot of environmentalists, other people will be happy to see this kind of data where you have less people fighting for resources out there, and we're all concerned about things like climate change. But in economic growth terms, we should be very clear that when you have such a decline in your working age population growth rate, it always leads to an economic slowdown. There is no country in the world, in fact, that has been able to grow at a rate of more than 5 or 6% when the working age population growth has been less than 2% for any sustained period of time.
Okay,
and India is already now falling below that.
That's interesting.
Yeah, so the point is that even when China grew very rapidly, back in the 1990s and even the 2000s, before that Korea and even India, all these countries had a very significant bump in their population growth rate, particularly in the working age population growth rate in that period. And I think this is something which we just don't quite recognize, which is the fact that demographics have shifted, including in India. It's not shifted as dramatically as the other countries, but including in India, and in that environment to grow very rapidly is just not statistically possible.
But what you do show, again, relative to other countries, yeah, we are declining, our population growth rate is getting slower and slower, but other countries are declining even more. And if you have a look, I mean, Russia is declining quite rapidly, almost -1% every year. We see China is declining slightly. Brazil and other countries like our income levels are increasing, but we are still way above that. So relative to others, we are still, our productivity shouldn't be hit that much.
Yeah, our overall economic growth should not be hit that much. And in general, there's a rule that I say that having high population growth rate is a necessary but not a sufficient condition for economic growth. There are many countries with a big increase in their population growth rates in Africa, Middle East, that have been economic basket cases. But the converse is there, that unless you have a significant impulse from that, you can't achieve very high economic growth rate. So this is not a judgment, which is the fact that a lot of people come back to me and say that this is great for the environment, it's good for climate change and stuff if we have. That's fair enough. But then don't tell me that we can grow
just because of that.
Just,
in fact, you have 4 Ds, so it's one of the 4 Ds.
One of the 4 Ds that a growth rate, our growth expectations need to change, and we need to be happy with those growth expectations then.
The slightly positive aspects that with the population growth rate that you talk about slowing down, how can we get our working age population increase faster so our productivity and our output can go up? And you have this remarkable statistic on women who are sort of in the working age population in India, actually working. And women in India, labor participation is only 21%. That compares with 45% of countries like us of the same income level, and 69% of women in China are part of the labor force. But India, 21%, that's a terrible statistic. But it also gives a bit of hope that if you make policy changes that get women into the working age population or get them working, allow them to contribute, your productivity and your output could go up substantially.
Yeah, that's the India story for you, that for every sort of story, there are 2 different angles, right? So at one level, this is such a damning statistic, the fact that so few women are participating in India's labor force, and there hasn't been, I think, a deep enough discussion that why is that the case. And remember that this number has in fact declined over time. So some people say in India it's not being captured properly in terms of the participation like the labor force, but if the same data is showing a decline.
Number one. Number two, the relative differences are huge. 21 to 45, okay, if there's slight underestimation, it's not going to be 100% underestimation.
But
and as you say, the trend.
The trend matters. The only one positive takeaway from this is that at a time when our population growth rate is slowing down, if we want to augment that and still grow very rapidly, if we can get this number up to 30 or 40% over the next decade, we will then be able to get back to growing at maybe 6-7%. If we're able to change this.
So that's a very, very crucial policy decision, and changing the atmosphere in India to get women participation in the labor force can change our economy enormously.
That's right.
But you were just saying that very few countries with 7%, so don't keep thinking you're going to get. So you're saying we should have a new kind of be happy, or a new criteria of what is a successful growth rate. because of the new environment, your 4Ds. And you're saying that around 5%, because the world, our kind of country, middle income and higher are going to be 3% and 1%. So 5% is the new norm, is it?
Yeah. So if you look at across the world, as I said, even the number of countries growing at a sustained pace of over 5% has dropped dramatically. Now, my point for India is this, that if you thought that you could grow at 7 to 8% in the 2000s and after that, the benchmark of economic success today, assuming business as usual, is 5%. So that now, if India wants to grow at 7%, it will need to carry out some very dramatic measures in a way that possibly China did in the 1990s.
I mean, I just saw that China's 70% women participation and ours 21. Get 70% women. That could be,
Yes, we'll have to take some very dramatic steps.
That is dramatic.
Yeah,
yes.
Very dramatic steps. But my sort of job here is to make baseline forecasts, which is the fact that yes, anything can happen. In terms of that we can make dramatic sort of changes. Tomorrow we may decide to sell all our public sector inefficient enterprises, fire 90 million people like China did. I just don't think it's going to happen, right? So if we take a baseline forecast in terms of what is practical given India's polity, given the very socialist DNA of so many of our politicians.
Indian socialists.
Indian socialists, we're going to call it. Given that sort of DNA that we have seen, what is a realistic growth rate that India can hope to achieve given the changed global environment and the changed demographics at home as well? And I think that given business as usual, 5% economic growth rate is what I think is a realistic expectation out of India over the coming decade.
You're actually saying it's realistic, not what I said, be happy with it.
That's right.
It's what is likely to happen, but you would...
Exactly. That in the past, given our incremental reforms, if we could grow at 7 to 8% with some tailwind from the global economy, today given where the global economy is, assuming we keep having some incremental reforms, 5% becomes the baseline given the changing demographics and other factors such as deglobalization.
And again, you point out that sustaining a high growth rate is not difficult. I mean, it's okay to do it for 5 years, 10 years, but do it for decades after decades is not easy. But India has not done too badly in that. If you explain this graph to us, 81 countries have done more than 5% growth rate for 1 decade only. And at the other extreme, for 5 decades, only 5 countries. And India has done it for 4 decades, where there are 7 other countries, 8 including India. So sustaining high growth rates of 4 decades or more is only 13 countries out of nearly 200.
Yeah, this is the point I think which is not sufficiently internalized, which is that once a country does well for a decade, often arrogance, hubris, complacency, all these factors set in. And then those politicians, the policymakers don't carry out too much economic reform, and then you begin to backslide again. So therefore, of the 200 countries in the world today, only 30 or 40 are developed countries. Everything else is emerging, and most countries in the world, from Brazil to Mexico to even all countries in Africa, have been emerging forever. So the whole point being that very hard to sustain economic growth rate. Do not take even 5% economic growth rate as your God-given right. That all because we grew at 7-8%, so what's the big deal? Our base is low. We should keep growing at the same pace. That's not happened with other countries. There are all countries in Africa, Latin America,
low base,
with an even lower per capita income and lower base than where we are today in Africa, where they struggle to grow at even that rate. So don't take it for granted. It is very difficult to grow at 5%. Even India struggled to grow at 5% in the 50s, 60s, 70s. It's only since the 80s that we managed to sustain a growth rate of more than 5%. And hopefully we can sustain that in the years ahead. But very few countries have been able to even grow at that pace, even when starting from such a low base.
Very important. Just doing it for even one or two decades, it may slip away. So many have slipped away after growing at 5% for 3 decades. But India didn't do too badly yet. And what's interesting, look at this. If India carries on at what you're saying, this base rate of maybe 5%, we will become the 3rd biggest economy in 10 years. Because relative to others, 5%, as you say, is pretty good.
Yeah, so this took some work in terms of what the projections are.
Yeah.
So here I'm assuming that China's growth rate in fact will fall to just 2.5% a year over the next decade, because its demographics are really like in a very bad way, and it has much more debt than India has, and all sorts of issues as far as China is concerned.
All the 4Ds,
exactly. Which hurts China much more.
Yeah.
So China's trend growth rate is likely to be 2.5%. America's, which used to be 3%, will be lucky to grow at a rate of 1.5% or so going forward. So in that environment, if India grows at 5%, as I say, in real terms,
base forecast,
then India should be able to overtake UK, in fact, in the next few months, that India will become the 5th largest economy. 5 years from now, then India will overtake Germany. And then 10 years from now, it will overtake Japan, based on these projections. Remember, Japan's growth rate is basically zero, practically zero over the next 10 years. So given these new baseline forecasts, India will become the world's 3rd largest economy by 2032. So it's a very significant market for the world, and it's a pretty significant economic achievement in absolute terms. But again, in per capita income terms, we will still take a long time to catch up with any of the countries, even the middle income space, forget the richer countries.
Yes, that's the point that you make, that in terms of per capita, the one thing is to be a big country, which is also partly because we are a huge population, so we always do well when it comes to scale. But in terms of per person, you say that if we grow at 5% a year, which is our base per year, will still be faster than everybody else. Population is growing by, say, even 1.1%. It will take 18 years for an average person's income to double in India. 18 years.
That's why we
in
need
the high point of China, they were doubling
every 4 to 5
income
years.
every 4 or 5 years.
Yeah.
And now it's going to take 18 years at 5%.
Yeah, but that's just the new reality, as I said. If we want to compress that, we need to have a per capita income increase or double every 10 years. That's really what the goal should be. But as I said, my forecast here just based on business as usual, what is realistic, what's the pace of reforms, and what's possible given India's polity and other constraints that India has.
So basically what we're saying is that India's average income is $2,200 now.
Yes.
10 years from now, or 18 years from now, it will be 4,400.
In a way, yeah.
Yeah. I mean, roughly.
Yes.
To wait 18 years to double people's income is tough, but anyway, that's the reality. So we have to think of many of the points you've highlighted of how to change that. And women in participation, labor participation is a big one.
Yeah.
Moving on to now a completely different issue, which you have done a lot of work on, is India's inflation performance, that we are improving, that we had very high inflation 40 years ago. It's coming down. We were higher than the rest of the world. Now we're about the same as the rest of the world.
Yeah, so India's inflation ranking slipped very badly in the 2010s. I mean, like in particularly, like at the turn of the decade. And now India's inflation performance in relative terms has improved. So this is one of those ironies again, that today inflation is a big issue everywhere, including in India. There have been a lot of protests about it and stuff. But again, putting it in global perspective, inflation is a very big issue everywhere.
That's the important point, yeah.
And I think it's
because
so important.
What your graph shows is that in 2010s, India's inflation was about the same. It was bad, but it was very much worse compared to the rest of the world. The rest of the world had low inflation, but we had high. Now our inflation has not improved or worsened, but the rest of the world has got higher inflation. So as usual, compared to the rest of the world, which you always do relative versus just absolute, we are better off now than we were 10 years ago.
Yeah, just to put this in perspective, that countries like the United States, which were used to having an inflation rate of barely 2%, their inflation rate has shot up to 8%.
Yeah.
UK, their inflation rate, I was told, by the end of this year, will be printing 13%. So this is a big inflation that has picked up everywhere. For UK to have 13% inflation, so yes, India has an inflation issue, but this is very much a global inflation problem that we have currently.
So our inflation issue has gone up, I mean, is around 8% or whatever.
7, yes.
But the world has now gone up from 2% to 8%.
Exactly, that's what's happened.
So should we feel it's a global phenomenon?
No, we can't, unfortunately, because the poor people get hurt by any inflation.
Exactly.
Like we know that, but at least our job here is to at least show comparatively what's going on, what is the origin of the problem. And this very much seems like a global issue.
Okay, now let's move on to something completely different, and that's the stock market, looking ahead at the stock market. And whatever you say, I will believe 100%, although I don't invest at all in the stock market. But where are we headed in the stock market? Just since 79 to 2022, the stock market was growing at 15.6% a year. You're saying looking ahead for the next 10 years, we're going to grow at about, the stock market is going to grow at about 8% a year. That means in 10 years, the Sensex will go from what it is now, roughly 58,000 to 130,000. But why is it going to drop from 15.6 a year to 8% a year?
Yeah, so let me just explain this. So if you look at the historical performance of the Indian stock market since we have data, since the BSE Sensex kind of data is available, the annual return in the stock market has been about 15% a year. Now, some of this has been inflation, some of it has been real. Just over half of that return has been real because the balance has been inflation. In dollar terms, it's been about 10%.
Right.
The issue today is that the Indian stock market, if you look at its long-term trend, is well above its long-term trend.
Oh, so you have a long-term trend, and then for the last few years it's been above that.
Above that long-term trend.
So you're saying it may come back to its
It
long-term trend.
may come back to its long-term trend.
Right,
so the stock market will go up, but may not go up at the same pace because it is much more overvalued today. Again, all this assumes that history sort of repeats itself. That now, if for some reasons the Indian stock market, gets more domestic investors and other, some changes happen, or a growth rate turns out to be even faster than what we are projecting, the returns could be higher. But assuming the historical norm, we should expect a stock market return of roughly 8% over the next 10 years or so every
An
year.
average of 8. It can be up and down and volatile.
That's
as
always
usual.
the case. But like assuming the trend growth
it's
rate, that's what
interesting
you
because
expect.
it's been above the trend rate recently, is going to fall back to the trend rate, which will mean 8%.
That's what we do in any projection.
Yeah. Very interesting. Moving on to important factor about how valuable is the rupee, and we shouldn't look only at the exchange rate. You look at the Big Mac index or the purchasing power, and what is interesting is that the value of the rupee is actually pretty competitive in the sense that the rupee cost of living in India, buying a burger or buying dal or buying any other everyday item, in India it's among the lowest in the world. You can see right there, the Indian currency, we've only listed 3 countries where their currency buys more than in India. But there's so many countries there, even including China, where their currency doesn't go that far as the Indian rupee.
No, in terms of, I think where the dollar doesn't go that far, right? So which is the fact that when some foreigner comes, like in a place like India,
he converts to rupees and then he gets a very good deal.
Exactly. And in places like China or Switzerland, it's not the case. So this is just a very sort of easy way for us to know that the rupee today is very competitive. It is very cheap, which should be good for our exports. Now, of course, we don't want any free fall to take place because that damages confidence. But at least on an absolute snapshot, the rupee's value today is very cheap and competitive compared to other countries.
Moving on to from something analog like the rupee to digital, the new digital world. And that's something where you say India is digitizing faster than most of the countries in the world. Just look at that. India's average annual growth rate in the last 3-4 years has been way above many, especially developed markets, but even among emerging markets, India's digitization rate has been very high, and that's a major positive, right?
Right, at multiple levels, as we will see, but I think that this is really a new source of growth for India, because at a time when it is much harder to export your way to prosperity in an era of deglobalization, when some of the traditional drivers of growth are looking a bit tired, I think that it's great to see this, which is the fact that the way that digitization has been embraced in India. The number of people who have a smartphone in this country, the way they're able to transact much more easily, the fact that India has a pretty big digital platform where we are being able to use, where money is being able to be transferred, and one of the very few countries where money is transferred without any charge. Right. Because in most countries when you do money transfers, there is a charge. Like it is one of the very few countries where that does not happen. So excellent. I think that the way that we've been able to digitize, the number of new companies that have come up in that space, I think is very impressive and really a big driver of India's economic growth. And this is something
and welfare. You make a very important point. If you look at the next graph, that's about the subsidies. When we used to give subsidies in actual physical terms, there was a huge amount of leakage. Now you say, while the subsidy share is stable, as we can see from that graph, the subsidy is about the same across last 3-4 decades, but the impact is more.
Yeah, so the spike we see is due to COVID and the pandemic, but the trend like of the last few years in terms of subsidies as the share of the economy has been roughly similar. But here's what's really gone on. I think this is the dramatic change. Right. That Rajiv Gandhi in the mid-1980s had made that statement that for every 100 rupees that's distributed, only 15 rupees tends to reach the intended beneficiary. I think that sort of stuck, right? Because it felt, it was not a scientific number, but it felt right in terms of it. And you know, we have done so much of election travels, and when we go out there, so many people would speak to us about the schemes are announced, but they would hardly get the benefit. Right. Anecdotally, what we have picked up in the last few trips that we have done is that people are getting a lot more. Now again, there are possibly a lot leakages which are still happening, and there's a lot of sort of arm twisting and thuggery which goes on.
We went to a place in Madhya Pradesh, a village where a woman was getting, an old elderly lady, senior citizen, was getting 1,000 rupees a month, but every time she'd go to the bank, it would get transferred digitally. Yeah. But before she got the money, the teller would say, you give me 500, then I'll give you the balance. He would take 500 out of a... So there's a long way to go, but at least it's transferred digitally, and there is there, and the leakages may have come down. Yes. So in terms of the fact that even if she's getting 500, the Rajiv Gandhi notion that only 15 is coming to her, like is possibly gone. So I think the fact that we have had this massive change is one of the most transformational things that has happened in India, and it's happening, which is benefiting a lot of governments, in fact, because they keep talking about announcing new schemes, announcing new stuff, but India does not have the fiscal resources to spend so much more. Right. And yet they're getting more bang for the buck. That, in terms of that when they spend here, they're able to get much more in terms of in their bank accounts. People call these freebies, but they're actually also welfare measures. They do improve the lives of poor people. If they get health insurance or they get a monthly stipend, a senior citizen, it does affect their lives. So it's not just a freebie, and whatever it is, the welfare system is improving because of digitization. Yeah, I think that's the important thing, because there's no end to how much you can give, but we are fiscally constrained in terms of what we can do. And we keep going back to the point about China. The fact that China spent all its fiscal resources in its initial years of development in building roads and not having a welfare system practically, because they just wanted people to just go to the most productive area. If you have to go to the coastal areas, go. We don't care about what happens to you societally. So it was a very sort of hardcore capitalist movement that took place out there. India's case, we can't do that. And in terms of, but we wasted so much because if we want to help the poor and we're giving these subsidies and it's not reaching the last person. So that last mile access change that's taken place in India, and we have created this public infrastructure digitally to do that, I think is a very big transformative step that's happened in India and is clearly having a political effect. Yeah, you say that could be having a political impact because governments are actually getting more popular by improving their welfare measures, and you say that is what could be one reason for changing the anti-incumbency to pro-incumbency. If you look at the data, now India has a pro-incumbency trend. Most governments are re-elected, which was totally different earlier. The last 5 years, 56% of governments are re-elected. In the old days, only 33%, one in three governments. Now it's more than half. So from anti-incumbency, we've gone into pro-incumbency, maybe because the impact of welfare measures is actually being felt and making governments in power more popular. Is that what you're saying?
That's right. In terms of that, the voter dissatisfaction with the governments may have come down. Again, as you know, these are multiple models which are at work.
Right, right.
But I think that this could be a very important factor and something we have anecdotally also picked up. So as you know, this term anti-incumbency was possibly coined by you and Dorab in the Indian context, because in fact in foreign countries, as you know, that you typically have pro-incumbency. Most governments tend to win elections.
I would say Dorab coined it.
Okay, fine. We'll give him the credit in absentia. But I'd say that in India's case, anti-incumbency was such a strong part of our political narrative. But I think that what an important change here, that more than half the governments are now getting re-elected. And one reason could be this, when we tie it up, that the welfareism is working more effectively in India, where people are getting the intended benefits.
Amazing span of information. I mean, Ruchir, you worked hard for once in your life. Now, just take us through a quick 10-point summary. And just we'll put the graphics up, and you can just explain very quickly of what each highlight you feel. I mean, you made more than 10 points, but just if you cut it down to 10.
Right. So I think that when we look at the 75-year history of India's economic development, what we see is that it has been V-shaped, which is that we had the first 30 to 40 years where we clearly lost the global development race.
Right.
But the last 30 to 40 years, we have recouped those losses. We are on an upswing. So, but the bottom line still is that our per capita income level compared to the rest of the world is still the same as where it was at the time of independence.
It's an amazing finding, really.
Yeah, so again, with India, multiple narratives, we can look at it both ways.
Yeah.
So that's one.
Right.
The other sort of big takeaway is the fact that we have now once again become the world's 6th largest economy, and hopefully we will become the world's 3rd largest economy in a decade's time. So significant progress, but in per capita income terms, we are still likely to be well below even the average middle income country.
Right.
And then when we look at the other implications of this economic progress that's taking place in India, I think that it is very important to put in mind that very few countries are being able to grow at even 5%. And we have to sort of gauge our economic success from that, and also be realistic in terms of what our expectations are. Now, if we want to grow much faster, there is a list of things that we can do, but realistically, given India's political structure, I find it very difficult that we're going to be able to hit those things.
So, the slightly worrying thing about 5%, the realistic, is that it'll take 18 years for us to everybody's income to double. 18 years compared to China's doubling every 5 years.
Yeah. But
anyway, that's the new world.
That's the new sort of normal, so to speak. But we hopefully should still be the world's 3rd largest economy by like in a decade's time. And then when we look at India's exchange rate, this was such a telling finding even for me, which is the fact that for the last 75 years, the Indian rupee has lost 75 rupees against the US dollar. Rather neat fit. The silver lining here being that now the rupee is very competitive. It's one of the cheapest currencies in the world.
We've gone from 4 rupees to the dollar to 79 rupees, so 75 rupees down in 75 years.
That's right.
Easy to remember.
Easy to remember. And then I think there are implications in terms of the stock market, which is the fact that the stock market is likely to still do well over the coming decade, but given the fact that it is a bit overvalued today, it's a bit expensive, some of the returns may not be as significant as they were. But otherwise, the Indian stock market has given a pretty good return of 15% in nominal terms, and even in dollar terms, it's been about 10% a year. So that's a pretty good outcome.
That was the past, and that was a bit above the trend, and now you're saying from 15%, it will be about 8% for
a year, and the Sensex should, people like numbers, should still be about 130,000 decade from now. So that sounds good. Then as far as India is concerned, there remain many challenges, from the fact that we have such a high unemployment rate, female participation in the labor force is still low, but one of the really powerful impulses of economic growth has been the way India is digitizing. That we are seeing digital growth in India pick up very significantly, among the fastest in the world, even compared to other countries which are starting from a low base. India's pace is
a low base, and that's why it's a high percentage. But whatever it is, it's a higher percentage than most countries in the world.
That's right. Even countries with a similar income bracket, India is doing much better out there. And the way that we have built out a public infrastructure for digitization here has been very helpful. This, I think, has some very good implications as far as the welfare state in India is concerned, which was so broken and inefficient. It is helping improve that. The intended beneficiaries are getting their payments, and this could also have major political, or is having major political implications, with anti-incumbency sort of switching possibly to pro-incumbency as governments both at national and at the state level winning more elections.
Because their welfare measures are actually reaching the people through digitization much more than earlier, when it was a lot of corruption in the physical handing out of welfare measures.
Right. And the last point I'll make is the fact that this has been one of my major gripes as far as India is concerned, that I would love this country to be more economically free, because we know that greater economic freedom allows entrepreneurs, allows people to do much well. The most economically rich countries in the world are also some of the most economically free countries in the world. So the more we do to increase economic freedom, to reduce the government interference in people's lives, the better I think it will be for India's economic progress.
That is a key to faster progress.
That's
more
right.
Economic freedom. And India, we are entrepreneurs in India, right? We show it whenever we're around the world. Give Indian economic freedom and he will flower.
That's right.
So you really see that as a key important step to take in the next
if we
years.
Want much higher growth rate than what we have got now.
Well, Ruchir, just fantastic. And I'd like to tell everybody all this is available on ndtv.com. So if you haven't got all the data in your head yet, and there's so much research done, Ruchir, many congratulations. And you made things very clear and put so much more into perspective for us. Thank you very much for joining us and explaining all this to us.
Delightful as well, Prannoy, to do this. Thank you.
Thank you.